The views and opinions expressed in this podcast do not necessarily reflect the views or positions of ACUMA, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to Actors on Point Podcast, the policy series, where we focus on policy issues impacting the credit union mortgage industry. I'm your host, Peter Benjamin. Almost 2 weeks ago, I sat down with Leah Dempsey, shareholder with Brownstein, and around that time, it was right before the news broke about the changes happening over at NCUA, and unbeknownst to us, DOGE was coming in and making some rapid changes, and of course, the administration came in and fired the board members shortly after that. And so, as you go about listening to this recording and of course this episode, just know that, Leah and I, as we were discussing, things happening over at NCUA, this is right before the news broke about the changes happening with the NCUA board. So all important information, we are still very much interested in how things will unfold over at the NCUA, and we will continue to monitor that. And I imagine that in our next issue or next episode, we'll give you a full update. But let's go ahead and dive right in. We hope you enjoyed the latest episode of ACUMA's On Point Podcast policy episode. Anyways, enjoy it. Before we get to our episode, just a quick word from our sponsor.
This episode is being brought to you by Loan Vision. Is your credit union looking to turn your accounting department into a profit driver? Loan Vision can help. Our platform delivers real-time data, loan-level insights, and automations to streamline workflows and improve control over financial performance. Transform your cost centers into revenue generators by equipping your team with the tools needed to better serve your members. And don't miss our monthly webinar series where we share key strategies and best practices to help credit unions optimize their mortgage operations. Register today at www.loanvision.com under our upcoming events page.
Joining us today as our resident expert is Leah Dempsey, shareholder with Brownstein. Leah, how are you doing today? I know we've been busy. Well, one, we've been keeping you busy, but how are you doing?
I'm doing well. Yeah, it's a little bit of a rainy, cold April day in DC, so that's a little bit depressing. But it was great to see you guys this week at the ACUMA Summit, and really fun to be with many ACUMA members that are, I think just coming up with a lot of inspiring ideas and are just fun to always talk to and learn from. So thank you guys for having me at that.
Of course. Now, you said it, we were at the summit and we talked about a lot of things. And, one of the biggest takeaways from the summit was there's a lot happening in DC, which is obviously why we are here, talking about policy issues. Now, first question out of the gate. And I think it's a very important question, because I think we've really set the stage, and I'm sorry for the long-winded intro to this first question, but throughout the year, here we are, April, but throughout the year, it's really been an ever-changing environment, and and you can correct me if I'm wrong, but this seems, I don't know, just thinking back to my time when coming into the mortgage industry, but this seems like even only 4 months, it already feels like it's been a year, right? At least as far as what has been accomplished by this administration. So first question out the gate is, from a very high level, can you just think about, or can you tell us, our listeners, top of mind, what's something that our listeners should really be focused on when it comes to policy issues that they should be watching that are really going to be starting impacting, the credit union mortgage lender?
Sure. Well, I mean, there's just a tremendous amount of activity happening in the executive branch and at the agencies right now that, has the possibility of impacting credit union mortgage professionals. The FHFA this week has had another extremely active week. We continue to see a ton of changes there. We saw the CEOs of Fannie and Freddie fired and replaced a number of board members. We also saw a new chief operating officer, John Roscoe, named to help lead those agencies or help lead those businesses as well. He is a former chief of staff to Mark Calabria, who worked in the prior FHFA Trump administration. So we kind of continue to see a change of policy at the agencies and at the GSEs, which we will, I believe, continue to see things rolling out that are impacting the industry. We've already seen a number of announcements that have made changes to how the process is done on a number of things. And I'll get into some of that more.
Can I ask a question on that real quick?
Oh, sure. Yeah.
All right. So, I mean, I'm a visual person, so I have to kind of sort of visualize this. So you have, what I'm assuming is going to be, the CEOs of both Fannie and Freddie, and they're both going to report up to the chief operating officer, and who's essentially going to act as, in many ways, a tiebreaker if there ever needs to be a tiebreaker, or the filter between that CEO and Pulte. Is that essentially how it's going to work?
I think so. I mean, I don't know the inner workings completely of everything they plan to do, but it appears like he is going to be taking on a day-to-day role of leading them, and that Director Pulte is going to be working closely with him. So I would expect them to be working closely together, and us to see them kind of collaborating on a number of items in the next few months.
So, this is someone who is, a seasoned vet for all intents and purposes in Washington, right? So, it seems like someone who is good in this position, right? They know is it okay to call him a DC insider? I mean, he obviously he's been in Washington, he worked underneath Calabria, so it's an interesting position. Obviously, he created this position, right? It's interesting to see how it plays out, because obviously it's a newly created position. It's interesting to see if the next administration carries forward this position. But from a person standpoint and an appointee standpoint, it's at least you have someone in there that understands the inner workings of that agency from the FHFA standpoint, right? So interested to see how this plays out.
I would say I think my read is that this says a lot about the Trump administration's willingness to engage in GSE reform. We know that Director Pulte has been eager to spin out Fannie and Freddie. We know that former Director Calabria was very eager to do that and did a lot of work on that. And I'm sure John Roscoe, in working with him, has a lot of experience in that. I personally just think that this shows just another move in some of what's going on that is on the agenda. It's something that the Trump administration wants to do. It's going to take some time. A lot of people have said really it's more of a 2026 item, but I believe that this is maybe part of that plan, as well as some of the things that you outlined too.
No, I mean, that was actually my next question. Like, does putting him in play, someone who is seasoned in that sector, the housing sector, and I think that's fair to say that, right? Does that, at one point in time, and you can correct me if I'm wrong, but at one point in time, Pulte said, GSE reform is kind of sort of put on the back burner at this point in time. Does this in many way speed up that process, because you now have someone who understands it, has been in the Calabria, era of FHFA, understands the inner workings, and now can really handle that transition? Does it speed things up a little bit? It may, without this guy, if it was someone else, it may delay it. I mean, who knows, right? But it's an interesting, interesting strategy, Cotton. Let's see how this plays out. That's basically all I'm thinking about. So I interrupted you. Let's continue forward. What else should our listeners be focused on that's coming out with policy?
Yeah. So, I mean, I would say at the agencies, other agencies as well, HUD is going through a tremendous amount of change. We're seeing cuts to not only staff, but a number of their programs that they had in the past. CFPB continues to not be fully staffed up. Right now, we're still waiting for Jonathan McKernan's nomination to be agreed to by the Senate, which we think is going to happen the first week of May. But during that time, we're seeing them start to roll back certain regulations and drop certain lawsuits from the Biden administration, CFPB, but still a lot of work to be done in engaging with any potential new CFPB employees and figuring out what their longer term agenda might be with regulations such as some of the mortgage rules that would be impacting ACUMA members. So a lot to follow there. And then the FTC, they fired the two Democrat commissioners, and they just, as of yesterday, confirmed another Republican. We're also hearing some rumors that the CFPB may be moving certain items over back to the FTC for enforcement or for regulation over there. So a lot to keep up on, and it feels like it's changing pretty much every day at this point.
Okay, so going back to McKernan, and we talked about this, at the summit, and you said something, very interesting when I asked you this question, and so I'm gonna reference you. So at the summit, I said, McKernan is an interesting pick for this position for CFPB director. He is a true, regulator. It's a good pick, but it's interesting because, for all intents and purposes, it seems as though they are trying to sunset the CFPB, which is why it's so interesting. You take an agency that what, for all intents and purposes, appears as though they are trying to close down, or what everyone thinks they're trying to close down, and you put a true regulator in there. But then you said, well, you have a gut feeling that he's going to take the CFPB back to, why am I blanking on her name?
Freddie Kraninger.
Kathy Kraninger era, and thinking about it, I've been thinking about it ever since you said that. The Kraninger era, that was actually not trying to get political whatsoever. That wasn't a bad time for the mortgage industry. She was willing to work with the mortgage industry on a lot of the issues that we had concerns about: ATRQM, LO comp, and those are just, I'm just naming a few, right? And so if that's his approach, and willing to work with the mortgage industry, providing clarity on some of these things that we have concerns about, that's kind of sort of a win in my mind. Granted, there's also the far extreme. Hopefully it's not that far extreme, but if he's willing to provide clarity, not bad, right? And again, you and I were in DC, last couple weeks ago, and that's all we talked about is, can we just get some clarity? Just give us the right direction, point us in the right direction, and we're happy. Am I reading the tea leaves right way? Am I understanding this right?
I think so. I mean, I think that Jonathan McKernan's been around DC for a while. He was on the Hill. He worked for Pat Toomey, who I think was a great lawmaker, and he was actually at both Treasury and FHFA. So he has, been in DC for a number of years and has been through a number of different presidential administrations. I think has been a very, has taken his job seriously as a regulator and been a fair and effective regulator in his past work. I do think his background in the mortgage industry from his work at FHFA would be a tremendous benefit to ACUMA members, and some of the work that you're talking about where there are a few regulations that are out there that could probably be improved upon. I think them going totally away could create a whole host of problems, and industry has been clear that they don't necessarily ever want to go back to a time frame when there's no regulation and bad actors are able to make things worse, and then people are probably less likely to look to lenders for mortgages and people are just afraid of the system, and all of that's not a good thing. So I think credit unions benefit when there's clear rules of the road, fair and effective regulation that's tailored to their size and scope and unique structure as member-owned cooperatives. So I'm hopeful that Jonathan will be a good advocate for that, and I feel like he will.
You said it. Credit unions thrive when it's an even playing field and we have clear instructions. And I think that's all we ever wanted is an even playing field with clear instructions. Whereas others want, a leg up, right? And, for those who want that leg up, you and I talked about this before, and you, Zach, and I have talked about this before. For those who want that leg up, what do they think is going to happen when the administration changes winds, right? Or changes sides? It's going to come back tenfold and bite them in the butt. Hopefully that doesn't make this podcast explicit by me saying but. But anyways. All right, so let's change gears, but sticking with the credit union side, but I'm also going to bring in DOGE into this. I think it's an interesting topic. Now, I do want to know, basically DOGE's role in all the agencies, but you just mentioned prior to the podcast that DOGE just went to the NCUA. So walk us through that a bit, because I think this is interesting. Was this always on the game plan, or is this kind of sort of a surprise?
I think they're going to pretty much every agency. It seems like they think that there are a number of areas of fraud, waste, and abuse in pretty much every agency, and that there are improvements that can be made. So I'm not shocked that they are also going to the NCUA. I do, as we've talked about on other podcasts, I do think NCUA is a little bit less political than some of the other agencies, just because of the way it's structured in having the holdover board members that kind of survive even after an election. But one of the most interesting things for me this week was the announcement from the White House that is apparently in coordination with DOGE, talking about really taking a look at any regulation that's out there, and particularly if it doesn't align with the Loper-Bright decision, which, as a reminder to listeners, is related to Chevron and says that if an agency doesn't have clear statutory authority to engage in rulemaking, they shouldn't be doing that. And basically the White House sort of thrown into a big mix of other press releases that they put out, noted that they are going to consider any regulation that doesn't align with Chevron and Loper, and think about rescinding it without going through the notice and comment period. So for me, as kind of an administrative law nerd, this is just a massive announcement to say that the administration is going to make a number of regulatory changes without going through the notice and comment period. To me, that's like abolishing the filibuster. It's something that is a protection for businesses to raise how regulations impact them, and for stakeholders to be able to provide their thoughts on what impact this would have. And frankly, on both sides of the aisle, it's not a good thing if regulators in DC are making decisions in a vacuum without consulting industry. That was a huge criticism of the Biden administration, CFPB, for not engaging stakeholders in the regulatory process. And I think the same dangers apply if the Trump administration does it. It's people that are rule writers in DC don't know the ins and outs of every single business in the country, and they don't know what the ACUMA members, for example, know about the inner workings of a credit union. And without that feedback, it's, to me, I think, really the possibility for a number of problems, even though industry, I'm sure, would be eager to have less regulation in a number of circumstances.
Okay. Very interesting. Very interesting. Okay, so just for the sake of time, I think there's also been some movement. I think and that's kind of shocked about that. And I know I'm sure you're going to keep us fully updated on that as it goes forward. Because we've talked about Chevron quite a bit. we posted a policy insights on it. It was, when Chevron was rolled back, the whole industry talked about it. I remember seeing stuff from America's Credit Union, MBA. I mean, you name it. I want to say almost every association out there talked about it in some way, shape, or form, because it was massive. Because it impacted not just us, it impacted every type of agency out there. So I'm sure you're going to keep us fully updated as that goes on. But just for the sake of time, I know we have to keep this train moving. All right, so let's go on to Congress in the housing space. What's going on with Congress in the housing space?
So, and you were up on the Hill with me 2 weeks ago. We met with committee staff on Senate Banking Committee on both sides of the aisle. They both have indicated that they're thinking about doing a Senate banking markup sometime in the next few weeks or months, which, that in itself is news, because in the past, the Banking Committee has gone full Congresses without doing markups. So the fact that they're already committed to doing one in Senate banking is positive for movement in a bipartisan way. So continuing to keep an eye on that. The Republicans talked about some of Tim Scott's landmark legislation that he's been working on. He's very focused on opportunity zones. He also has a number of his own bills that I think he would like to see move. Senator Warren, who is the ranking member, is also passionate about housing, and really, if there's any room for consensus in a bipartisan way in the country right now, I think it's on housing. People still, the interest rates remain fairly high, and there's still a number of challenges to people that are looking to be homeowners, and members of Congress on both sides of the aisle are getting a lot of pressure on that. So we will continue to work on that and watch it, but it seems like there is at least some momentum going forward right now in Congress.
Okay. And I have to ask this, right? Because obviously it's we were down there on Liberation Day. That's what it was called, Liberation Day. So we were down there on Liberation Day. Are you hearing anything from Congress in general on the tariffs and their impact on housing? Since they are doing this housing markup, they're obviously voicing concerns on the impact on affordable housing. Are they saying anything?
Congress is I can tell you, they're getting a lot of outreach from their constituents about the tariffs. It's been a roller coaster this week on the tariffs. I'm sure everyone watching the news is aware. It started out that the stock market was getting close to crashing, and then things looked better for a day, and now things are kind of evening out, and there's really a lot of mixed analysis of where that's going to go. But I will just tell you from a personal perspective, I am currently buying a home, and mortgage rates when I locked in were somewhat decent compared to a few months ago. They got really good for a few days, like around the tariffs. And then as of today, I just checked again and they're back up. So it's kind of been just all over the place in terms of mortgage rates, which, to my earlier point, that's one of the biggest concerns of home buyers. So I don't know that we are totally sure yet this is kind of uncharted territories, what's happening right now in the Liberation Day postmortem. But to the extent that it impacts the housing market, that's going to be, I think, important in a lot of things, including GSE reform, which we talked about earlier. If we don't see things going well after all of these tariffs, it's going to be pretty hard to spin out Fannie and Freddie in a rocky economy. So all of this over the summer, we'll see how things play out. But we are certainly living in exciting and interesting times where there are massive changes happening basically on a weekly basis.
I mean, so that leads me to my next question, right? And I don't want to be negative, because we always do our best to stay positive, and nor do I want to be political, because we do our best to stay as middle of the road as we possibly can, in everything that we do. But we also know that there's different branches of the government, right? And that run our government, right? So what happens when you have two of the branches? You have the administration and Congress not agreeing with each other on this tariff stance, because you have obviously the Trump administration, and he is dead set on going down this tariff path. And for all intents and purposes, it doesn't look as though he's going to pull up at any point in time or stop this train. And what happens when Congress finally says enough's enough? What happens? Like, what happens in 6 to 12 months when this engine finally breaks?
Yeah, and I think one thing that was interesting at the beginning of this week is when the stock market really was not doing well. I was wondering, because Congress is about to go on recess for 2 weeks. So if it had not sort of jumped back up in the last few days, I think members of Congress over those 2 weeks, it would have been interesting, because I think they would have gotten a huge earful, and who knows what actions they would have taken when they came back. Things have kind of evened out a little bit over the past day or two, but that's far from the certainty that anyone needs on these issues. So I think everyone's going to have to continue to follow it. But I do think when, to the extent that consumers and constituents, that their bottom line is impacted and their pocketbooks are impacted, that's when members of Congress hear the most from them. So they, at some point, if it's not proving to be beneficial to consumers, that's when I think members of Congress start to potentially jump ship and think about their own elections 2 or 6 years from now, where they have to defend some of these items. But I don't think we're quite there yet. I think things got a little bit better at the end of the week, and Republicans are feeling more positive about the outlook. But I far from certain, and we're going to have to continue to follow it and see how things go.
Okay. Well, Leah, we have to start wrapping up. Any final thoughts before we actually do?
No, I think I would encourage ACUMA members to stay tuned for all of our updates that we're doing, and to continue to attend the regional summits and the annual meeting, because not only are things happening quickly, there's also a lot of new faces to hear from. There's new directors at a lot of the agencies, and a lot of people with views that people should be aware of and want to just stay closely involved in what's happening. So I would say great to talk with everyone, and look forward to continuing these discussions over the next couple months.
Awesome, Leah. Well, thank you so much for everything that you do for ACUMA, our community. It's always good learning from you, and I guess we'll see you very soon. So again, as always, thank you.
Thank you.
And to close out, thank you again to Loan Vision for sponsoring today's episode. And to all of you, we know your time is valuable. Thank you for tuning into the latest episode of ACUMA's On Point podcast. We hope you enjoyed it. Until next time, be well, my friends.
Thanks for listening. We'll see you next time at the ACUMA On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.